Hello, this is Brian Shannon from AlphaTrends.net. Today is Wednesday, the 16th of April, 2008, and the S&P 500 finished with a $3 gain today, up 2.26%. NASDAQ was up about 2.8%. And we saw earnings from Intel last night. The Intel earnings were responded to positively. I posted a chart of the after-hours reaction last night and said that it could possibly set up a strong trend day today. And then about an hour into today's trading, I had posted another chart at about this point saying it looks like we've got a trend day on our hands, and that's exactly what happens. And when I say a trend day, basically when we have these large gaps up, the market can hold above for that first half hour or so that I was talking about yesterday. A lot of times we see the market will continue higher. It drifts like it does like this through, during the mid part of the day as volume slows down, and then later on in the day as the buy orders reemerge, we get that strong upward movement like we saw today. So S&P 500 is, once again, short-term in a rally mode as it came down and found some support at the levels that we've been looking at here above right near those April lows, and I was looking for strength above this level, and also saying that the 5-day moving average was important. Yesterday in the video yesterday afternoon, I said that even though the direction of the 5-day moving average was lower, when the market gaps strongly like that and above that 5-day moving average and can hold on to it, a lot of times it turns into a trending day, similar to what we saw on April 1st, and that's exactly what we saw here today. Now this market is coming back up to the level that was important earlier in this week at about 137 or so. We'll keep an eye on that. It looks like that has been a little bit of resistance for this market recently, but on a larger picture, that is the daily time frame, we've now looking like we're heading up towards the top end of this range, up near that 139 to 140 level. So the tug of war continues as this market continues to search for a bottom, and with days, it seems as though more of the big days have been coming on the upward when we have upward movement. It seems like we're getting these huge up days followed by just a grind lower and more large up days. So I think that's positive for the market. It shows that people are really just, the market comes down on an absence of supply, but then when people start to think about buying again, they rush in all at once. And I think that's weighing probably on the psychology of the bears, and also making more people think that they're missing the opportunities as we get this rally. So we continue to see some encouraging signs in here. This is the VWAP since the beginning of the year. It's good to see we're back above that, and also back above the 50-day moving average. Looking at the Russell 2000, this market also very impressive here today. If we look at the average price since the beginning of the year here, we can see we're clearly back above that level. And the more important levels that this market's going to have to contend with, $72.50 to $73 a share. We are, of course, getting close to that very quickly once again. On this 30-minute time frame, we saw that the short-term level of resistance at 69.5 that I was talking about yesterday was taken out on the open with that gap, and this market ran very strong, consolidated, and then we saw another move higher late in the day. If we look at the 5-minute time frame, for instance, you can see real big volume on this initial move. Midday, we saw a slowdown in trading, but then a resumption of the buying back in, and that's exactly the type of pattern that you look for on a very strong day such as today. So we're getting back up again towards what's been important for this market recently. We can take a look at it this way, and you could start to make a case for a big inverted head and shoulders pattern here. I don't want to get too aggressive about that call, though, because, again, the 73 level is really the most important level. I think if this market can hold on, we've still got a lot more earnings reports due out. Things can change very rapidly during earnings season. We've still got a declining 200-day moving average, so let's just take it a couple days at a time, and remember that we're in, I think, more of a trading environment while we're in this range-bound market that we are getting up towards the top end of once again here. The XLF, this market was up 67 cents, or 2.7%. So actually a very strong percentage gain. You see, though it's still looking really, you can't call this thing bullish by any means. We've got that support at 24.40 that this market has been holding onto. here over the last month or so. Since that one-day recovery from the Bear Stearns fallout. But realistically, I don't think you can take the long side seriously until we at least get above the important 2620 level that we've been looking at. And more importantly, I think is this this downtrend line right here, and probably taking out 27. I think if we can take out $27 a share, and you can see how far that is away, we've still got a lot of work to do for this market. But as a more bullish scenario, getting back above that 50-day moving average, getting back above that trend line, which again are kind of coming into that 2620 level, then I think we can start to look at these financials as maybe we've got the worst behind us. We have tomorrow morning, I believe, are the Merrill Lynch earnings. So, the market did get above that 25 level that I said yesterday. The market needs to get above 25. That might put that 2620 back into play. So I think that any further strength we see here, maybe based on Merrill Lynch earnings tomorrow morning, we'll see. We'll put that 2620 level in play, and hopefully the market can get above and hold above 2620. If it could do that by Friday and hold on to that level, I think it would set the tone for a just psychologically, it would set the tone a little bit more bullish for next week. The Nasdaq 100, this market was up 2.79%. Again, the key level of support that the market did not violate, and the one that I've been talking about the most, is that 43.50 level. This market also holding above the 50-day moving average, so that's good to see, of course. The bigger level of resistance that this market is going to have to contend with is the $46 level, getting back up towards that 46 and holding above it. Here we had that was that Friday and Monday of last week and Friday of the week before, where we got above $46 but were unable to hold. And if you remember, that was where we saw late day selling on both of those days. That was that led to the inability of the market to hold above that $46 level. That's where we saw this most recent breakdown come from. We saw the gap lower here and continued weakness, lower highs and lower lows. Yesterday I said that we needed to see the market get it back above 44.50, as that would put the $45.5 to $46 level in play. We made it just under that 45.5 level, coming up to close this gap right in here, which is a good thing because it traps more people short down here, and more people who sold their stocks in that area are regretting their decisions to sell, and that just adds more fuel to the upside. We also broke this little downtrend line, always good to see. And same thing here as far as a trend day goes. You saw that the market gapped up. It spent about 45 minutes digesting those gains as we saw a real battle fought in here between the buyers and sellers as it broke past that those initial highs, and those gains were consolidated, and we saw the market back above a rising VWAP. Then we saw just a real nice pattern here of higher highs and higher lows, and just a real nice pattern. We saw midday a little bit of a shakeout, but really hardly, very, very shallow on that pullback. The buyers came back in, cleared resistance right here at about $45.25, and we saw a final thrust into the close with increased volume. So short term, the market acts very bullish. We're coming up to some potential important levels of resistance. So take it one day at a time, one stock at a time, but we're seeing more encouraging signs.